Do you want a tax deduction, a loan, current cash flow, and potentially to help your business stay afloat and or grow during this coronavirus era? Hi there, my name is Kenna French. I'm with Vast Solutions Group. We are the nation's premier tax and financial engineering firm for entrepreneurs. We've been in existence for over 50 years, and even with all this coronavirus amongst us, we continue to grow. We work with clients from New York to Florida to California to Washington State in tax mitigation, retirement, and other issues confronting entrepreneurs and retirees. The $2.2 trillion CARES Act recently passed on March 27th is doing an excellent job of providing financial relief to individuals, families, and small business owners. The bill includes a 401k and defined benefit plan relief and also changes the rules for early withdrawal and 401k plans and a number of other 401k strategies, enabling people to somehow navigate the COVID-19 waters. Listen up if you want to learn how the CARES Act can help you. In fact, we have a new service at Vast Solutions Group, and it's called CARES Plus. What is that? It greatly helps for cash flow and deductions that enable small business owners to potentially stave off foreclosure or bankruptcy or maybe even grow their company. In many cases, entrepreneurs can contribute money for 2019, and if affected by the coronavirus issue in any way, they can pull out $100,000 via a loan of their vested amount. Also, there's provision that allows people to suspend loan payments that would otherwise be due in 2020. The first payment, by the way, wouldn't be due until March of 2021. One more thing. Participants can also take out distributions of up to $100,000. Now, what to do with that money once you've pulled out the money, either a loan or distribution? It may make sense to put that money back into your company to help sustain operations. If you invest in something that is allowed to be construed as a tax deduction, you once again, as an entrepreneur or small business owner, get another deduction on the money that's already been put into the plan. This can make a lot of sense for an entrepreneur who has a tax liability for 2019 and or 20 while hoping to keep business operations in existence. Essentially, if you withdraw from a 401k or defined benefit plan via a loan, you can still take steps to keep your retirement savings on track so you don't fall behind. Now, in the absence of urgent needs, investors may wish to continue to focus on long-term financial objectives and make use of emergency savings to the extent possible, by the way. If you withdraw money from a qualified plan account, even with a penalty of 10%, this can have a significant impact on your retirement savings. As you lose that composite growth, as a matter of fact, that can affect you. It's worth thinking about. Now, what happens when you withdraw? What happens if you make that deposit from a qualified plan into an account within 3 years? There's no penalty. You can avoid paying income tax on that withdrawal. Many benefits here. Now, distributions made after age 59 and a half related to the coronavirus is exempt from the 10% penalty for withdrawals up to $10,500 from any qualified account. I'm going to give you an example. Here's a client who had a defined benefit plan and needed money for current corporate operations. They had over $1 million in their defined benefit plan, and both of them took out a $100,000 loan. Therefore, they took out a total of $200,000 or $100,000 each. They both expect to put back the assets via loan payment after the coronavirus issue subsides in roughly 5 years, with payments being quarterly. With the loan proceeds, they are reinvesting the money back into the company, thereby getting another tax deduction, enabling themselves to hire more employees. Similarly, they can put some of the money back into a Roth 401k because the revenue and or tax liability for this year, 2020, will be relatively low, so those funds will grow tax-free and be taken out as such as well. Now, conceptually speaking, they will end up with roughly an $80,000 tax savings on the $100,000 they put in originally, while also saving employees jobs, while also, maybe more importantly, staving off bankruptcy. All due to the CARES Act and our service at Vast Solutions Group called CARES Plus. Now, for more strategies like this and other qualified plan mitigation strategies, corona relief strategies, etc., or any other strategy that can enable an entrepreneur to be in a better position, please look us up on the web at www.vastsolutionsgroup.com or give us a call at 888-808-8278. We are here to help you, the entrepreneur, the retiree, to better position themselves for tax mitigation, prepare for retirement, hoping that you do not run out of money in retirement. We're here for you. Once again, Kenner French, and I definitely appreciate you taking the time to spend with us to learn a little bit more how we can help better your situation.